Gatama, the Director for Africa Business with Yabx, Conviva subsidiary. Welcome to the fourth edition of Digirupt Finance, conversations around digital innovation in fintech, hosted by Conviva in association with Your Story. Here, we bring together the global fintech leaders to discuss the future of the industry, banking and payments at large. In today's episode, we're going to take a look closer at digital lending and how it is scripting inclusiveness in the financial ecosystem. To set the context, digital lending has gained increased popularity thanks to the increased smartphone penetration, credit range flexibility, speedy online transactions, which has only grown further because of the pandemic. Although lending platforms have fewer customers comparatively, they have witnessed an increase of up to 25% in terms of users in the last 1 year. According to a new report published by Million Insights, the global digital lending platform market is projected to reach $15.3 billion by the end of 2026, which is not too far out. In this new reality, if a lender wants to stay relevant, it needs to go fully digital as soon as possible. That being said, as various channels of delivery emerge, there are challenges to tackle around the security and compliance for both the customers and the lenders. As we ride this customer demand and post-COVID lending wave, what's the way forward for responsible digital lending? To give us a bigger picture, we have with us a wonderful panel of global industry leaders, and I would first like to introduce Juan Seco Delgado, the Senior VP for Consumer Financial Services with Jumia Pay, the fintech arm of Jumia, the leading online platform in Africa, well known to most of us. Prior to Jumia, Juan spent his career at PwC and KPMG, working in transaction services, where he was a director in New York, providing financial due diligence services and MA advisory for corporate and PE funds. Allow me to share my screen. 1 minute.
Hello, everyone. Thank you for the introduction, Eunice.
I hope you can all see my screen now. So that was Juan. I will move forward to Vibhor Mundhada. Vibhor heads the merchant payments business and digital wallets for Mashreq. He has worked previously in banks, technology companies, and fintechs like Citi, Cognizant, Times of Money, a payment and remittance fintech, Atos, and Sintel. At Mashreq, he has built an industry-leading acquiring business on the back of innovation and strong focus on sales and customer delivery. Some of the key roles: served as the chairman of the Acquirers Committee on the EU Banks Federation, represented Citi on the NPCI panel to launch RuPay e-commerce in India, shareholder and representative for Mashreq on the Emirates Digital Wallet LLC, as well as a board member at a fintech JV of Mashreq. Welcome, Vibhor.
Thank you. Good afternoon, everyone.
Lastly, we have Bala, who has over 30 years experience in the world of startups. At MoneyTap, which is now known as Freo, Bala is the co-founder and chairman driving the vision and strategy of the company. Bala was one of the co-founders of Prime Ventures Partners, a seed stage fund based in Bangalore. Bala has built 4 companies, the largest being Smartfish, bought by HP Hewlett-Packard in 2005. He has also volunteered with Mr. Nandan Nilekani, chairman of UIDAI, and played a key role in defining the application strategy and developer ecosystem on Aadhaar from 2010 to 2011.
Thank you, Eunice.
Yeah. So I think we'll kick it off. I'll stop screen sharing and go straight into the conversation. We have a beautiful set of panelists, and I think we could just quickly start off, and I'll throw this question to all the panelists. Just how has digital lending adoption in your specific country or your industry evolved over the last couple of years? Leading from the front, what according to you is the biggest pain point that needed to be addressed? And maybe we start with Bala, having been in the startup space with MoneyTap in the digital lending systems. Welcome, Bala.
Thanks, Eunice. So the way I would probably answer the question is that the situation, speaking for India, has dramatically improved in the last few years. And it's improved along 3 dimensions. So the 3 dimensions I would say are, number 1 is product, number 2 is capital, and number 3 is regulations. To quickly double click on the product, when we started MoneyTap, now Freo, people were just basically doing traditional loans, and they were done by banks mostly and a few NBFCs. But the consumers were really not getting a loan, and if they did, they would get it after a very long process, and they would get like one big loan. We introduced, for example, a concept called a credit line based on an app in India. It was the first of its kind. Initially, people thought it won't work. It's too new. Why would customers want it, et cetera, et cetera. We have done over $1 billion of disbursal on it right now. And our product and many products like this offer now flexibility to the customer, where you can borrow little bits of money, pay it back, borrow more, pay it back. You can borrow it on a credit card. You can borrow it as cash. You can borrow it on UPI, which is India's payment network. So it's become a lot more flexible. And now it's taken for granted. And a number of companies are offering credit line is almost like a base, and it's a given. So this ecosystem has evolved on the product line. Similarly, on the capital, when we started, the availability was only with a bank, or you had to be a registered lender. Now there are a lot more sources of capital, hybrid capital, and the price of capital, the cost of capital has also come down. And lastly, on regulations, in India, the regulations have kind of gone 1 step forward, 2 steps back sometimes, but overall, I would say it is easier than it was 5 years ago, where with all kinds of electronic authentication and KYC, know your customer norms, and so on and so forth. To answer your last question, Eunice, the major pain point that need to be addressed, I would say it is sort of sophisticated debt instruments are not in India yet. So securitization, for example, is a huge challenge. It's doable, but it's a big problem. The regulatory clarity is also not very high. It's there, but it'll be very clear if the bank, sort of central bank, lays out like a blueprint for the next 5 years. And I'd be happy to answer any more questions on this, but let me pause here.
Yeah, great. I'm sure they'll come up at some point. So over to you, Vibhor.
Thanks. I think UAE is it's a very different market than India. So if you look at, if I use the same lens, which is product and regulation, so digital lending in the UAE, I would believe, would have 2 aspects, right? It's an extremely high penetration credit card market. So one lending would be the credit card bit, and the other bit, which is the traditional or the digital lending that we are talking about, has already picked up in the UAE through the buy now, pay later route. So I'll touch on a little bit on both the pieces. So as all over the world, buy now, pay later has started to evolve in the UAE, with a lot of startups being present in that space. So the merchants, given we are a very large acquiring bank, we have seen a lot of interest coming in from the merchant community as well for the buy now, pay later product. And if you look at capital, there's a lot of capital that has started to flow in some of the buy now, pay later companies in the UAE. So the digital lending on the buy now, pay later piece, like globally, is picking up in this market. On the card side, a lot of innovation is happening on the method of delivery of lending. For example, Mashreq has pretty much digitized the entire card journey, where you can get a credit card. So, or I would say, in credit card, while there is card, there's also credit, and that underwriting is happening pretty much paperless in a click of a few buttons. So on the traditional lending bit, that is getting digitized with bank investing in new tech. The buy now, pay laters of the world are in the market. They are partnering with acquirers. They are partnering with banks. And some of the merchants, typically online merchants, are seeing an uplift of up to 5 to 6% using those modes of payments. Lastly, I think regulation is also very important. So today, the regulations are evolving. The new regulations that have been put out by the Central Bank of UAE for retail payments are very, very forward looking, where there is clear guidance for acquirers, for digital issuers, etc. Buy now, pay later area is a place where regulation is evolving, and when the regulation comes in, I think there'll be more parity between digital lending through the buy now, pay later players as well as banks, which would help more, as you pointed, towards protection of the consumers, the merchants, as well as the ecosystem as a whole. So I think there's some work that's happening on that space as well.
Yeah. All right, great. Interesting. You mentioned buy now, pay later, and how the e-commerce sites are critical in that. And I guess that's a space Juan is in. So over to you, Juan, to answer our first question.
Yeah. So I mean, maybe using Bala's framework of thought, right, between product, capital, and regulation. I mean, in the market where we operate, which are quite diverse, right? We go from East Africa with Kenya, Uganda, to West Africa, Nigeria, Ghana, and French-speaking Africa, and then we also work in Northern Africa, right? So you have Egypt, Morocco, so quite diverse markets, right? First of all, from the point of regulation, so you have Kenya obviously leading force here, not necessarily lack of regulation, but the fact that lending was always considered not regulated as long as you were not a deposit taking entity, which gave entry to the Talas, the branches of the world, which came to Kenya first, and then obviously digital loans through the telcos, which took over. If we think at a product level, not even through a smartphone as a distribution channel, right, but USSD, and allowed all of those channels to go mass market and all the way to the bottom of the pyramid, right? But as the product has evolved, what you're noticing is that they are going now more into a digital product, going through a smartphone, more sophisticated ways of KYC without having to go through a pre-scoring kind of solution, which is obviously what is a bit of requirement when you go through a USSD telco model. And we are seeing that in Nigeria, where there's quite a bit of movement as well going on there, whether it's from fintechs operating under a microfinance kind of regulation perspective, or also banks coming and partnering with fintechs to kind of join forces and using the fintechs or e-commerces as a distribution channel. And then going back to the buy now, pay later, I think it's becoming more and more relevant in markets where regulation for digital lending per se becomes a bit more constrained, right? I'm thinking precisely of markets like Egypt, right, where you have players like Value offering buy now, pay later, and as a way of going now into the digital lending without going into a more traditional, I would say, or easier to disburse traditional digital loans per se, or cash loans, just because of the regulation and the constraints that creates. So we are seeing quite a few of these. There are markets that are yet untapped, I would say, from that space, and everybody's trying to see how that will happen. I'm thinking of Morocco, and in West Africa, we are not seeing much movement yet, as I said, primarily due to constraints from the capital and investment, and mixed with regulatory, right, where you would need a bank, but banks are not yet there when it comes to appetite to onboard digitally certain customers, right? And that's where the fintechs and e-commerces of the world need to bridge that gap. I clicked mute by mistake. That's where we see a lot of the pain that has been historically addressed by the e-commerces and the fintechs, right? How can we bridge that onboarding, that distribution risk that banks are kind of always been fearful of going into? We will take care of the onboarding, the KYC, even if in some cases, empower the risk engines of the banks. Not ideally, but sometimes if the bank is willing to fully leverage ours, then we go ahead, and then the bank is there to bring the capital and the regulatory oversight or coverage needed so that the partnership is successful. So there's quite a bit of, given the many markets where we operate in Africa, the diverse of situation is quite, the diversity of the situation is quite large. But I think the framework that I really like the framework that Bala used at the beginning, and I think it really helps kind of understanding the kind of axes of complexity that we have in many of the markets.
Yeah, great. All right. Thanks so much, Juan. I think already we can start to see the themes that are coming out in terms of flexibility, which is coming from a customer demand, product channels, diversity, which enables you to tap into the various groups of customers at different levels of smartphone penetration. There's talks around just how do we get capital injection. We've seen a lot of the fintechs getting funding from different organizations, and this is starting to become more and more known and available to a number of us. We've talked about innovation, and it really needs to be partnership led because we all have strengths in the various sectors that we're in. So I guess we've mentioned that COVID has been a game changer in all our digital businesses. So maybe to you, Vibhor, how has it changed things in your specific company or space? And are there opportunities based on this pandemic that we have not yet tapped?
I think it's a cliche to say that COVID has changed the consumer behavior. I believe that it has been a watershed moment for digital businesses as a whole, and that's what we have seen. Given we are a very large merchant acquirer in the UAE, almost having 30% market share, we can see that shift that's happening and people getting more comfortable to use digital modes of payments to do transactions. For example, in the UAE, 90% of transactions now are contactless and on the merchants, and out of those contactless transactions, almost 25 to 30%, in fact even more, 35 odd percent transactions are being done through your XPays, which are your mobile wallets. I think these are the indicators that clearly show that people are more comfortable to transact using digital modes of payments. People are more comfortable to use their mobile as a mode of transaction. And if you look at the merchant segments, traditional merchant segments, which were extremely cash heavy or traditionally face-to-face, has also seen a big shift. For example, supermarkets have seen growth on digital payments on the online channel of more than 150% between pre-COVID and post-COVID. So the behavior of segments which traditionally were thought to be segments where you need to go and buy have changed. And again, you talk about partnerships. I think a lot of ecosystem players have also come together to do this, and business models have evolved. For example, there are grocery aggregators today who are getting all the supermarkets together and becoming the conduit for people to shop. Another interesting segment is QSR or restaurant and food delivery. Globally, food delivery has shot through the roof, and UAE is no different, where people are very used to clicking a button and getting food delivered to their home. So I think that shift has already happened. We have each market has tried various means to get consumers to move to one, transact online, and once they to buy online or do commerce online, and once they do that, to make them comfortable to complete the transaction in terms of the payment online. And I think COVID has been a big boost, has led to a big shift to that, where consumers are comfortable both to buy as well as pay online, which is the catalyst for all the stuff that we are talking about, including the likes of buy now, pay later, digital lending, etc., etc.
Yeah. All right, Bala, your response to that?
Yeah, so I broadly agree. We're in the middle of sort of a massive shift right now. And obviously, this has been strongly accelerated by COVID. And as Vibhor mentioned, we're seeing that in India as well, where UPI payments have just sort of gone through the roof. And people are just, walking into a branch is really not something even the older people are willing to do. So we're literally witnessing sort of the birth of the digital neobanks in a lot of ways.
All right. Juan, how has it changed for e-commerce? I'm sure that has been quite something.
Yeah, I mean, using Vibhor's first comment, right? A lot of assumptions made on regards to the COVID impact on e-commerce, especially when it comes to Africa, right? To be to be fully transparent, COVID was a bit of a head-tails scenario for us, right? A lot of constraints on the supply chain, a lot of impact on the purchasing power, right? Which when you talk about when you hear about e-commerces in the US or Europe, right, that's not necessarily what you hear, but a lot of it has to do with the support of government on the daily spend of most of the households, right, which was not the case in our markets. So a lot of head-tails, but at the same time, quite a big shift when it comes to usage, right? So a lot of more adoption of FMCGs, groceries, right, which were categories that we inherently tried to push aggressively in the past, and now came naturally with COVID, right? So the COVID certainly helped in that behavior of users now understanding that, you know, groceries is definitely something you can do online and it's convenient. FMCGs is definitely something that you should do online, as opposed to, you know, buying your electronics and your phones and then other, you know, one-time purchases. So that helped in the day-to-day, and that's what we're seeing in the e-commerce, right? A lot more traction on transactions and a lot more traction on usage and daily engagement. But still, you know, that head-tails when it comes to big items and electronics, right? Which always impacts the GMV. But you know, and then when it comes to digital lending, what we saw is you know, it was a tough scenario. I'm sure here Yabx would have a lot more data to support that, right? But you know, it was a tough scenario where a lot of, you know, portfolios had to be, you know, retrenched and focused on collection, right, rather than distribution and growth, which was growing at a high pace. But at the same time, we are seeing, you know, a lot of adoption and engagement again and traction post-COVID now, where people are being able to learn a lot from what happened last year or over the last year and a half. So it's mixed scenario, I would say, especially in our markets. I think it has put us in the right framework when it comes to a digital player in the space, but it's not necessarily been all, you know, sailing scenario and help to navigate.
Yeah, true. I mean, some countries took the route of the regulators saying that transactions need to be free for some time. So there was also impact on those industries in terms of their day-to-day business. But yeah, I think we learn from the experience, we pick up, look at the untapped opportunities and move on. I think Juan, while you were speaking, maybe just tell us a bit more about the Jumia lending product, which launched sometime back in 2017 with the aim of making it easier for SMEs to grow their business. Just tell us more about that.
Yeah, I mean, so maybe going also back to the beginning, right? So we operate a marketplace, right? So we have the consumers on our side, but we also have the sellers, right? And the sellers, we need them to grow. The more, you know, the more working capital they have, the bigger the SKUs and the bigger the offering that we have on the marketplace. So we kept discussing with them, you know, we pushed them obviously actively to expand the range of products that we have. And one continuous feedback was, you know, lack of access to working capital, lack of access to financing. And when we tried more traditional ways in the early days, right, of going back and tell them, you know, bringing a bank to support them and, you know, doing that sort of traditional partnership where we are there and engaging them, that wasn't really working because banks had really not a way to consume the data of our sellers on Jumia, right? For them, it made not necessarily a lot of sense. So all we did was on the Jumia lending side, which is our seller lending marketplace, is we built a platform where sellers can connect, you know, disclose their sales to the financial players that are partnering with us, and then the banks and the fintechs that we are working with are able to consume that data in a way that makes sense to them, and most importantly, is vetted by Jumia, right? So a lot of the feedback that we were getting is that, you know, sellers with very decent sales and, you know, rolling numbers were going to the bank with a statement from Jumia that, you know, they couldn't trust. So that's where we come in, right? Which is, one is, these are the actual numbers. This is what each KPI that we're giving you from this seller means, so that you can consume it. And most importantly, you know, as a seller on a marketplace, then to a bank or to a fintech, what we're telling you is, if, you know, Eunice is a seller in Jumia and she has been doing 1 million per month for the last 36 months, then we can tell you that's that run rate is going to continue, and most importantly, that's going to help you repay the loan first before we disburse to the seller. So that gives a first lien and guarantee to the bank that makes them not necessarily having to look at other more traditional data points when it comes to credit score, and really looking solely at the performance of Jumia, which is really what you're assessing, right? It's the Jumia cash flow, independently what's happening anywhere else, because you have a first lien on that. So very solid portfolio when it comes to NPL for our partners, very happy. What we need to bring to get more traction, and it goes back to the capital point of view, is more players and more appetite to lower the cost of some of these loans, right? Despite the number and the traction, banks are still fearful, and as it's said sometimes in the industry, right? There's no bad risk. It's just badly priced risks, and people are pricing a bit too high sometimes. And we're trying to bridge the gap so that the interest comes down, and then the appetite also increases from the sellers themselves, which is what it's probably going to be the next phase.
Yeah. I think critical from your comment is know your customer. How do we get banks to start accepting other channels of information to gauge and know your customer other than what is traditionally known to them? So maybe over to Bala. Historically, credit institutions have been cautious with new to credit, just like what Juan was talking about, due to the lack of credit history. However, given technology advancements, how can lenders now more confidently lend to new to credit borrowers? Are we able to leverage on each other in the ecosystem to build stronger KYC?
So this is, of course, the classic sort of a $1 billion question you're asking. Let me try to answer it at two levels. So firstly, in India, there are credit bureaus, and people who have borrowed, if you buy like a scooter or a motorcycle or any of the services, you get recorded in the bureau. So the Indian Credit Bureau has data, but it's very thin data, right? So the data is not sufficient. And it can be fairly easily supplemented, right? And then you can, with other digital footprints that the customers have. And with that, you can create a pretty good profile of somebody even new to credit. And India is doing something interesting. For example, we have something called an account aggregator framework, where with a fairly easy token that you give, that you authorize, we can pull your bank statements, for example, electronically and read them. So India's got a lot of these things going on, which is why I think some of the pace of credit is picking up very fast, especially post-COVID. So, and then we have, for example, what we do at Freo is that we have a product called Freo Pay, which is a micro credit, right? So it's a credit line, but for very small ticket items, if you're buying a cup of tea, or if you're buying, you're recharging your mobile phone. So the credit limit for these are very small. So think of it like a credit card. It's a convenience product. You have to pay your full balance at the end of the month, but it's very micro credit. And based on your repayment history with this, we're now able to create your intent to pay record, which is what the credit bureaus fundamentally have. Like, are you a good person? Do you pay back your money or not? So there are a number of these things in India, which are both systemic, like credit bureau data, bank aggregators, so on and so forth, as well as people like Freo who are doing Freo Pay and very small micro payment products where you can develop a credit history to be able to address the new to credit market.
Great. Maybe Vibhor, your comments on that, just new to credit, use of technology to be able to do some scoring and rating on those customers. How do you see it, and how has it been for Mashreq?
I think the points raised are extremely valid. I think there are already bureau and scorecards that are available, and the tech allows us to superimpose data outside the scorecard that's available, and then you could build models for people who are already in not new to credit, or already bureau rich or bureau thick, as the market may be, depending on how you call it. But for new to credit, I think that's a space where a lot of data could be used. So as Bala pointed out, giving small loans to get consumer behavior and then, then define what the credit line should be. Or in our case, again, I come back to the fact that, I truly believe that tech and, payments and technology has the power to change lives, lives of a small entrepreneur to a consumer. And I think merchant-led efforts are also key to this. And I think products like buy now, pay later are products which are using a lot of information at the merchant, because a lot of merchants are while some are independent buy now, pay later players, but then they carry the information of where the person is transacting, how often a person is transacting. You could superimpose data from merchant partners onto this and build models which are more sophisticated for you to take more informed decisions. Again, in certain markets, regulations are very clear. In certain markets, there are regulatory arbitrages. But the shift and direction is towards using data, using alternate modes of identifying the credit worthiness, and then doing the lending. So at Mashreq, we are trying to. So we have invested a lot in our digital capabilities, both inside and outside, which is we have worked on microservices within the bank, and those are available for ecosystem players, and we have a big ecosystem play. For example, we have noon.com is a large e-commerce player in the UAE, and we have launched a tightly bundled credit card with Noon, and we are building scorecards with such merchants to see could we co-create products where we could use strengths of each other. Lastly, I think one point that is important, especially in the buy now, pay later piece, and I think it was touched upon during the discussion, is collections, right? While digital lending is picking up, collections is equally important. So, for example, if you look at buy now, pay later, while we are saying these are alternate rails and they are not using credit cards, in most of the markets, the money is being collected through a credit card at the back end, right? So, is it truly an alternate mode of payment? If the cost of collection is a credit card, then how do you manage the commercials of the product itself? Because today a lot of free capital is coming in, but once the models mature, then these things would also become important. So better models of collection, alternate models of collections are also the key to scale up some of the solutions that we are talking about. Because if you are doing buy now, pay later, and if you're collecting it on a card, then the cost of that collection would hamper the profitability in the long run. So those are some of the things that the players need to be aware of, evolve, and that would be a key success factor for this to pick up, is what I feel.
Yeah, true, very true, Vibhor. I think as we're speaking about buy now, pay later, we know that consumers are increasingly moving to alternate credit instruments like BNPL. And Bala talked about how in India this has been picking up over the years in quite a significant way. Maybe to you, Juan, being in the e-commerce space, what does this payment method, how does it perform in your region, and specifically for Jumia, in terms of acceptance and adoption? And then what is the scope in financial inclusion? Like, how is it playing out?
Yeah, I mean, very early days when it comes to buy now, pay later in most of our markets, right? A lot of it has to do from a pure e-commerce perspective, right? So meaning conversion when it's at the checkout, right? So as an e-commerce, you invest a lot to take a user all the way to the checkout, right? Then what we cannot afford is for a user or a consumer to be lost when he's being offered a buy now, pay later, which a large majority of customers will at least be curious about it, and then find out that at the end of the process of being enrolled, he doesn't qualify, right? I think that has to do with a lot of the why you are not seeing yet buy now, pay later being heavily adopted on e-commerces yet, because most of the buy now, pay laters are not able to do a real-time credit score when it comes at the time of the checkout, right? So there is buy now, pay later players, but they're going from a more two-phase approach, right, where they are onboarding their own customers themselves, etc., and then working on as a payment method and being used as a payment method on some of the e-commerces. We are seeing this especially with Egypt with value, etc. I think other players are trying to get there in Nigeria, but you are not, and there's a lot of new fresh startups that are trying to crack it for sure. There is a lot of buzz going on. How it materializes is a different discussion later on, right? In part because of what Vibhor is saying, because there's the way BNPL, as we've seen in other markets, right? The merchants are the ones to finance. So if the merchants themselves are not seeing yet the appetite because of the potential impact on the funnel and on the conversion, then that's gonna take a lot of cost to bring the main appeal of buy now pay later, right? Which is 0% interest or very low credit risk for the consumer, right? Because it's the merchant adopting it. So I think it's still early days when it comes to our markets, but we will get there as some of the these players start to grow their portfolio and then become have a bigger base, and then we start seeing on more e-commerces, right? Even guys like us, we will try to obviously, we know that that's a big growth lever that we need to crack. Whether it's partnering, whether it's going a bit deeper into the value chain to crack it, as we've always done, right? We always try to partner. We always try to figure out who's doing it full time as their main core business. If we find out that that's not working out to bring the value that we need, then we will try to go a bit deeper and try to bring more support and better user experience. And over time it will happen. I'm sure 2022, 2023, you will see this going a bit more mainstream, like we're seeing in India and other markets.
Yeah, true one. So maybe back to Bala. In terms of neobanks, this is not a new concept, and most of them, having launched in India, have a primary focus on goal-based savings and investments. As India's first credit-led neobank, what is Freo's vision in light of this?
Sure. Eunice, it's a great question. So let me just step back a little bit, right? So the way the legacy banks, the traditional banks, the State Bank of India, for example, and other large banks, the State Bank of India is the largest bank in India. The way they've operated for decades is that they open up bank branches on the main street or every street, and they find customers who just walk in, right? You see a bank, you walk in and they provide financial services. They don't need to really effectively go and hunt for customers. Customers walk into their branches. Now, digital banks have to work much harder because, the digital customer, there are, millions of apps on the app store. So in order to find a digital bank, to find the customer, they need to, first of all, find a hook to the customer, a reason for the customers to come to them digitally, whether it's on an app or on a website. And if you look at, if you take this paradigm and look at what the successful neobanks have done, they've tried to solve sort of one real problem that gets the customer engaged. And then they've usually found one or more sort of monetization engine that you can actually make money from the customer. So first you need to get the customer to engage with you, come back to you again and again, and then you make money from it. So in our worldview, neobank equals customer engagement times monetization. It's like a simple equation, right? And if you look at Nubank in Brazil, for example, they've solved the problem of credit cards, because getting credit cards in Brazil was a massive pain, and you couldn't get it, right? Think of it with loyalty in Russia, Monzone in 26 do make cross-border transactions easier. So everybody has their own hooks of getting the customer and monetizing them. So for Freo, Freo pays our hook. We've been doing credit line for years now, and it's a QR code based sort of buy now, pay later product where you don't need to integrate with a merchant. It's like an open network, like MasterCard and Visa, except it's QR code based. So that is kind of our hook to why the customer should come to us, because we're giving a convenience product to pay later. And once we are there, for us, credit is the monetization engine. Again, it's been proven out over years. The business generates a lot of revenue because credit in Indian markets is the only way to monetize. Right? There is no money in pay later in India. There's no money. There's no revenue. There is no revenue in transactions in India because the Reserve Bank of India puts all kinds of caps on how much a merchant can pay and how much you can charge and so on and so forth. So the monetization in India is only credit. But the hook and the reason people come to us is convenience of a credit line or a pay later product. Now, different other neobanks might have other hooks to get a customer, like goal-based savings sounds like a good idea. And just like there is no one bank, anywhere in the world, there's no country I know of where there's only one bank, right? In a free market, there are going to be multiple banks. So there are going to be multiple neobanks as well. What applies to traditional banks will apply to neobanks. But in our view, neobanks have to have this equation solved, right? You need to have customer engagement times monetization. You cannot only have engagement and no money, because eventually you'll need to make money. But you cannot only do monetization using credit, because credit is not a very engaging product by itself, right? You take a loan and you pay it back over 5 years. You don't need to go to the bank again and again to pay a loan. So you need an engagement hook to keep the customer coming back into your app, and you need to monetize the customer. So that's our worldview.
Yeah, interesting. And just to look at how that is evolving, and with more and more speak around bank tech and open banking. I mean, it's evolving so fast and everyone is catching up. When you speak about hook, that always takes me back to the classic case of Facebook. They started off with just hooking us to in terms of connecting, and eventually now they're monetizing beyond anything any of us would have ever thought of. Yeah. So maybe this question I would throw to Vibhor. What are some of the key things that financial institutes need to consider to enable sustainable digital lending growth? And then how is your company utilizing advanced analytics and big data to solve the problems that Juan was talking about, just loan application dropouts or completing the journey, decisions, amongst other challenges?
I think it has come out through the themes of the discussion, and I think what applies to the market applies, like Bala pointed out very eloquently, in terms of what is it, what does it mean for a neobank. And I think banks are also moving towards becoming, so one is technology. I think technological transformation is the key. And if you look at Mashreq has been the pioneer in digital transformation, digital innovation in the country and the region, if I may. So, you talked about open banking. I think there's a lot of ecosystem play that a bank needs to do. And, to do that, in order to, engage with ecosystem players, be it fintech, be it government organizations, be it e-commerce companies, you need to have the technology to where you could stitch up those products. So, stuff like, hollow cores within, a lot of microservices outside, which can be stitched up, and, you can have quick go to market. So for example, Mashreq has gone through this massive digitization journey where product releases are now a matter of weeks and not months or quarters like a traditional bank. So I think tech would be at the heart of it, and tech-led ecosystem play is the key. That's one bit for us. The second bit you talk about is data. I think we are investing a lot in data. The UAE also has a credit bureau now, so we are building scorecards over and above the credit bureau using the data from the various channels that we have. So we are a very large payments business. So millions of transactions are coming through on our merchant network. You can superimpose those transactions on our consumers, and you can then find patterns which can allow you to not just do lending, but do stuff like next best offer, what is it that you would need next, and of course mature stuff like lending. So I think investment in tech and looking at ecosystem play as well as using data is the key for banks. And in the end, the consumer, I think the lines between banks and neobanks, while they have not blurred at the moment, but most of the banks are moving towards that with sophisticated mobile banking capabilities, with tech that's more scalable, more API-able. Most of the forward-looking banks are investing in it. And we also have our own neobank play. So we have our own neobank called Mashreq Neo. It has been doing phenomenally well. And as Bala said, there's a use case that needs to be picked up. So, the use case of people who are first time in the country, who traditional banks have not been able to serve, we have used that, and we have had a tremendous success in terms of acquisition. And now we are moving towards the monetization phase with products such as small ticket loans or credit cards, etc.
Maybe one you can weigh in on that in terms of advanced analytics and big data. From a Jumia Pay perspective, how has this been evolving? You're on mute.
Apologies, I lost connection for like 5 seconds there.
No problem, no problem. I'm just following up on the conversation we just had with Vibhor around technology, big data, and how we're just utilizing that to analyze and make loan application better decisioning. How has that been for Jumia Pay?
I mean, we're still in our early days, right? As I say, most of the time, what we're doing when it comes to the seller lending, we are providing that data visibility to the banks and to the fintechs that we're working with, so that they're able to make a decision. Most of it is around, consistency of cash flows from the sellers, whether they have out of stocks, which gives a lot of visibility into their operations and their commitment to the platform, the seller rating, et cetera, et cetera. What we are seeing is that banks are more and more able to consume alternative data, which was not necessarily the case in the past. At least, not sure able is the word, but at least have more appetite to go into that discussion. And B, they are, even if they cannot do that, they are open to rely on another partners to take that decision, as long as there's skin in the game from both parties. I think that has been the most dramatic change. When it comes to big data, I mean, big data is a big word that I think gets thrown out a lot. It's more around, ability to, I would say it's more around appetite to consume it, right? When it comes to Jumia, for example, the data points are endless, right? And I always take this example that when we go and frame this partnership to banks, their question is, what data can you give us? So Vibhor, don't take this bad, but we always get this question like, what data can you give us? And it's very difficult to get into that discussion as an e-commerce, right? Because a data point itself can be 20 different other data points, right? Where the customer lives is one data point, but is that a good location? Has he moved? Does he always get the item delivered to the same location? Does he get paid on delivery, cash on delivery, or is it prepayment, et cetera, right? So I think that there needs to be a bit more understanding around what is the output of the data that people want to get, right? Is this a number, a credit score that one party is going to own, or do you really want raw data that you want to take an ownership of and then consume in your own way? And at that, the second one is also a bit difficult for us, e-commerce and digital players, to share, right? We are quite protective of our data in general, and we want to be able to go into the first scenario where we say, look, this is what we think is a good customer, and you should give him credit, and then let's agree together on how we enable that. So I think there's going to be a lot of evolution around that, and let's see what it ends up being, right? But because there's data sources are multiple, and there's way too much data to consume.
Yeah, true. I think, when you say big data as a word that's become really cliched, just the irony of how much data we sit with, but then we fall back to AI, artificial intelligence, and machine learning to crunch this data and do something with it. But we always go back to the human oversight and how much of that is required. Is it the hippo mentality in decision making, where it's the highest individual paid person in the organization, irrespective of data, is then making the decision? So how do we merge the two? And maybe Bala, I'll throw this to you. While automation is good and algorithms, like we're talking about, how much human oversight is required, and how do we form a balance between the two?
Yeah, I think Vibhor touched on this earlier. One lesson everybody who's been around in credit for a while will tell you is that there are two parts to credit, and this is even more critical in emerging markets like India or Africa. Is that the first part is the underwriting and giving the credit, and that can be done pretty well by machine learning algorithms, and we've been doing this for years, and our algorithms are very sophisticated, and they do a pretty good job. But then there is the other part, which is collections. So collections can be digitized, but that's where the human judgment and a lot of the human input comes in. Collection can be automated to a reasonable extent. We all do that in India. I'm sure you do that in Africa as well. But beyond a certain point, collection is not automated anywhere, even in China, as far as I understand. And that's where the human thing comes in. So credit is really two parts. One is underwriting and the other is collections.
Yeah, interesting. And I think while you're still at it, maybe it's a good time to give us a bit of background. As the oldest bank in UAE, Vibhor, with 34 branches initially, and I think now you're down to 10. I don't know if that has changed. And preparing for a digital fast future. How will you deal with clients who really want to walk into brick and mortar? I know we've tried to balance in the banking industry between branches and agency banking, but what are the plans in terms of the journey to digital only or fast, and the clients who still want to be served brick and mortar?
So we have taken a strategic direction towards becoming a digital first bank, and we have always been market leaders in digitization. So if you look at our history, we were the first banks to issue a credit card in the UAE. We were the first banks to launch an ATM. We were the first ones to get merchant acquiring in, right? So it's not a call that has been taken because just because Mashreq wanted it. This is what our consumers are telling us every day. The transactions that are coming in through our online channels are increasing exponentially. And that's a consumer behavior shift that has already happened. What we are doing is, while the branches are coming down, what we are doing is we are investing in smart teller machines, for example, where the ATM and the machine could do not just simple cash withdrawal, but stuff like we have a virtual advisor where you could log in. There's someone who can call, you can have a conversation with, and get a lot of stuff done that you could traditionally do at a teller or you would walk into a branch. So there are branch networks that are available for certain consumers who want to come in and visit. But our consumers are telling us that they are more comfortable in using digital modes of doing transactions. And if you look at it, we are investing heavily in, I talked about our mobile banking, our microservices led approach, plus the way we are transforming our branches as well as our ATMs into not just an ATM, but almost like a mini digital branch where a consumer can do a lot more than just use a debit or a credit card to withdraw money, for example.
Right. Thanks. Thanks for that. I think moving a bit to channel, we've all talked about what the customer wants and how the customer is leading the direction in terms of technology and innovation and guiding the banks from a strategy perspective. We've already talked about just being able to quickly launch products into the market, and I think from an agile perspective, when you talked about 2 weeks or 3 weeks iterations and just over time getting it right over a period of time. Maybe to Juan, when you look at the regional differences, apart from form factor like smartphone versus feature phone, what are other things that we should model in technology or business, particularly in this space of financial services and inclusion? I know mobile phone has been a big driver, but what else would inform just how we are moving forward?
No, in general, the way that the smartphone versus the feature phone was nothing else because we are able through the smartphone to start looking at alternatives that other than traditional sources of credit score, right? Yeah, if obviously with the user's consent, right? But you can start looking at what apps he uses, geolocation, how agenda and how he manages his contacts. So you can start having soft data points himself on the user on top of what he's providing. You can start looking at transactional data if he's willing to share it, from the partners he's working with, and hopefully collating that so that that's essentially what I see a lot more, and what we are seeing in our markets in Africa is a lot of players trying to come in that space, right? Of trying to structuring the data that is being generated across multiple digital lending initiatives and partners, right? So as a digital lender yourself, whether it's a bank, whether it's a fintech, whether it's a partnership, can you start looking at providers of structuring data of the activity of the users, right? You have players that are looking at it from reverse APIs, right? And trying to accessing the data from the banks, and the user, just giving that connection to the partner. You have partners that are structuring SMS data so that they can create a whole financial profile of the user and giving that to partners that are willing to loan. So you have a lot of sources of alternative credit bureaus, if we want to call it like that are popping up based on this digital lending space. And I think that that's what's going to end up happening. You have players like Plaid, right, that have done that before, but you're going to have, platforms themselves that are going to be able to bridge the gap between all these banks and digital players and start structuring that data. That's what I think you're going to start seeing a lot more. Seeing that, we don't have, unfortunately, UPI or, a government that is as active as we have in India, that is structuring that and providing that platform. In many of the markets where we operate, I think that that's the way things are seeming to be framed in many markets where we are looking at right now.
Great. I think we'll move over. There are a couple of questions from our audience that have been posted. There's one, and I'll leave it open. How serious is the problem of diversion of bank funds for purposes other than the fund is given to the borrower? So I think this is back to the question on capital, and maybe Bala, we can go to you in terms of, yes, cost of funds, we're now getting more, but is there that possibility of diversion of funds by the borrowers?
Yeah, I answered the question on the chat. The short answer is yes, there is a possibility. It's a minor headache, but it's not the biggest problem.
All right. There's another question on digital lending apps approved by RBI. This is probably relevant to you as well. Where can we find the regulatory information from RBI websites on the app? Not too sure if you tackle that as well.
Yeah, I answered that as well. There is no such whitelist, not yet anyway. So they're talking about it, but there is no list of approved apps by RBI. You can go to Play Store and type lending, and you'll see like thousands of apps.
Yeah, true. I think in Africa, in Kenya specifically, it has gotten to about 65 apps on digital lending at one given period. So true, there are quite a number out there.
There's fraud apps as well. So I must warn your listeners that there's a serious crackdown happening. There's a serious amount of fraud apps which do take all kinds of data and do blackmail. I mean, there's a whole scam in India going on, but so one has to be careful about going to legitimate apps.
Yeah, there's one here specifically to you, Juan. When you look at the regional, okay, no, that we already tackled, Justin. We did go over that. If there are no other questions from the audience, I'll go back to just wrapping up in terms of data security, privacy, confidentiality, customer protection. Maybe with Vibhor starting us off, how do you get these 4 pillars right so that we get faster decision making, superior customer experience, and we all abide by the GDPR laws around data privacy? So it's a fine balance, but your thoughts around that?
Yeah, I think data privacy, data security is paramount for Mashreq and for any bank. I think the reason why consumers are coming to a bank and trusting a bank with their money is the fact that the money would be secure, data privacy would be maintained, obviously within the regulatory framework. So I think that's paramount, and that's where not just that, but regulations. And I think that was touched upon by Bala as well. So today, if you look at regulations, there are regulations that are different for a bank in a lot of markets versus the new age digital lending players, right? For example, a bank may have to do a credit bureau check, may have to check the capability to service debt, versus a new age fintech who is doing digital lending may not fall under any of these parameters in a lot of markets, and they could potentially do lending quicker. But in the end, is the quicker lending the right way to lend? only time would tell. And I think that balance, as you said, need to be maintained, where, while you want to do stuff quickly, faster, as Juan pointed out, that data is paramount for e-commerce companies, data is paramount for banks as well. Unless the consumer is giving you consent under the regulations, it's absolutely important that we do not, especially for banks. I mean, that's the trust that you can't breach, and we take that very seriously. Through, like most banks, through a clear infosec policy or global compliance like PCI DSS, etc. I think that arbitrage is available today. That arbitrage should not be misused, and all the players need to be careful, because it's not just about the company, but it's protection of the consumers as well.
All right, great. Juan, over to you around data privacy, security.
Yeah, no, I mean, look, I think it's a reality, and I agree with Bala, right? There's a lot of aggressive lenders, to put it mildly, out there, and it goes all the way to fraudsters that are using way more the data than the user intended it to for it, right? As Jumia, we are GDPR compliant, PCI DSS compliant. We, nothing happens without the consent, and if you operate from a smartphone perspective, you thankfully also have iOS and Apple and Android to mandate some of the things that you can do, right? But the reality is that there are a few rogue agents out there that are sometimes giving a bad PR to the guys that are trying to act diligently, right? I think if we want this to grow, and if we want this to be a sustainable industry, data privacy is going to be a core element, and it has to be the core element of the industry, right? Because a user is willing to give data only to the extent that he feels comfortable giving the data. So data privacy is paramount here, and how you manage it, and how transparent you are with your users.
Yeah. Bala, your comments on that, and maybe as you finish, there's a question to you. Would MoneyTap like to expand into other geos like Africa, where lending is less regulated? Technology-wise, you mentioned that you're well-placed. Is it a regulatory limitation? So on data privacy, and then maybe answer that question.
So that question maybe can be done. The person can sort of ping me privately on LinkedIn or something.
Okay.
As the data privacy goes, I would echo what Juan just said, is that, in technology, like you're seeing this with crypto right now, right? So the regulators are always like 10 steps behind technology, right? It's just too fast. And so in the first wave, you will have a lot of fraud. You will have all of these excesses. And the first set of regulators are, like Juan said, actually are Google and Apple, right? So they are the first ones because they understand technology, obviously. And Google actually pretty heavily regulates privacy data in India. So what you can read on your Android phone, which is what most customers use in India, is very heavily regulated. And Apple is even tighter, right? You can't read a SMS, for example, and so on and so forth. So I think the real regulator in India is actually Google in some ways, who follows broadly GDPR and sort of global privacy standards. We can nitpick about specific things, but broadly, they are the ones who do it. And honestly, I think it is for the better, because it's hard enough for technology people to understand technology. It's impossible for regulators to understand technology. So if you start with saying regulators, let me come up with guidelines, it'll most certainly be messed up, and there won't be any innovation. So actually, I'm quite comfortable where there are a bunch of sort of maverick and inventors and creative people going out there. Of course, there'll be a few excesses. There will be here and there, people misusing it, and then it's okay, I think, for Google and Apple to play the first role of regulation, and eventually the regulators will come in like they have in other industries. But it's better to have a lag time so that the technology settles down. Everybody understands what is a good regulation and what is a regulation that is going to stifle innovation. So I'm not too worried about this. I think it's the right way.
Yeah, true. I think as we conclude, maybe it's just to wrap it up with everyone's thoughts around what emerging models or trends to look out for in the digital lending space next year, 2022 and beyond, in respect to maybe just globally or your specific region or country. So we could start with Vibhor.
Yeah. So if you look at globally, digital lending trends across various markets are shooting through the roof. If you look at again at more traditionally credit heavy markets like US, still stuff like buy now pay later is growing. For example, over the last 1 year, buy now pay later for millennials has grown by 85-90%, for Gen Z by more than 150%. So consumers are becoming more and more open to getting digital lending. The ability of using the line that has been lent directly at merchants through technologies like QR codes, integration with acquirers or e-commerce websites will become more and more will come to the fore as the lending scales up. So I think the things to note would be that consumer behavior, consumer preference would shift towards digital mode of lending. Ecosystem players such as fintechs, banks, merchants would come together to create a better value proposition. And lastly, as everyone has said, regulations, doing the right thing, as well as customer privacy, etc., have to be looked at very carefully by all players to ensure the models are sustainable, because a lot of these things are new to the world, and if it has to be sustainable, it has to be done right. So those are my thoughts on it.
All right. Juan, over to you.
Yeah, I mean, what we're seeing, we're still trying to figure out, as we operate in this space, like there's a lot of buzz obviously on buy now, pay later. I think a lot of it is driven obviously by capital available when it comes to investment in that space and appetite to do that. So it's difficult to see through the trees on who's an actual valuable player or not right now, I think. But definitely that's where the space is, right? Consumer financing, I think that's where the investment is gonna, or the growth is going to be in our space. The first wave of it was digital pure cash lending. I think people want to get a bit more sophisticated and start using those, instead of disbursing cash, to start giving lines of credits in the way that Freo is doing for purpose consumer financing. And I think that's what the next phase is going to be. How do players enable consumer financing in ways that are tapping into the untapped market? Because the reality is that consumer finance doesn't happen much in our markets, right, in Africa. It is there for a very small niche. So how do people get to access that and expand their purchase means?
And I think, Juan, as you summarized that, there's a specific question on the open Q&A around Jumia sellers. Maybe just have a peek and answer it on the box.
Yeah.
Over to you, Bala. Emerging models to look out for.
Sure. I think we're going to be going to sort of confluence model where you're going to see the digital lenders already, like, for example, we are a credit-led neobank, right? We're doing way more than just lending. So definitely we're already seeing a merging of in India, credit cards, QR code based payment apps, lending, all of these are already merging already. Right? So it's hard to tell a difference in a Freo Pay between, is it a Freo Pay lending app or a payment app? I don't know. It's both. Right. So savings is another thing which is happening. We're launching our own Freo Save. So say with you're going to see these things kind of merge, and the customers are going to go and say, I want this function X. Who's going to do it the best? I'm going to go with that. And it doesn't need to be sort of old bank. The banking brand sort of matters to some extent, but again, there are lots of startups with a lot of money, so brands can be established overnight. A number of online players have proven that. So one doesn't always need to, be around for hundreds of years to build or decades to become a brand. So I think you're going to see more and more sort of merger. Already investment and savings are already linked, like goal-based savings is kind of like that. So all of these functionalities you're going to see kind of linked more and more. That's be my prediction.
Yeah, great. Thanks for that. I think maybe while there are a few questions on credit scoring and buy now pay later apps, just who to trust. That's, I mean, very, very open. Like you said earlier, people need to do their homework and be sure not to be engaging with apps that are just looking to fish your data and your information. And I think in conclusion, I'll look at the question from Catherine Munene. I'm passionate about women and fintech and just how we can get women more included and connected with mobile services and mobile lending. So my answer to your question around what would be the best customer engagement or hook idea to effectively capture the African woman market in the financial digital space. One, you need to be solving a problem. I think that came up when one of our panelists was speaking, and specifically a problem that impacts the community or the family that the woman sits in. If I give an example of, for example, Vodacom in India, with apps that they've generated or created around security for women as they go about their business within the country, that has been quite a success in many of the towns, because then it's a real problem that the customer was being solved for, and I think that's something that Bala keeps alluding to even in the neo-banking space. What's your hook? And are you solving a problem? Then after that, you can begin to think about the commercialization space. So let's engage maybe off this on LinkedIn to speak further around female-focused fintech and financial inclusion. And I think that brings us to the end of our session. Thank you so much to all our panelists, Bala, Vibhor, and Juan, in your individual spaces, whether in the neobank or with Mashreq, with your merchant acquiring, Juan in the e-commerce space. Wishing you all the best as we all gear towards making financial inclusion a real and responsible industry within all our spaces. So once again, thank you very much to the Your Story group, and of course Conviva, who are our hosts for today. Thank you very much, guys. Thank you.
Thank you.
Thank you.